All right, strap in, everyone. Today's deep dive, we're making you the investor who drops knowledge bombs at your next party. We've got JP Morgan's 2025 investment outlook, think of it as their crystal ball for where the big money's moving. And their CEO, right off the bat, says something interesting. World's kind of messy, right? Wars, elections that are nail biters, you name it. But markets had a killer 2024. And JP Morgan thinks that's just the warm-up act.
Yeah, it's not every day you see that kind of disconnect.
Right. So they've got these five big themes they're watching. And honestly, they're all kind of woven together in ways that even I was like, didn't see that coming. Global policy easing, which always sounds so technical. But then a capital investment boom, especially in AI, power, the whole security thing. Then what happens after all these crazy elections around the world? How do we build a portfolio that doesn't just like crumble under pressure? And then where the real action is, the new frontiers of investing, where the really savvy folks are putting their money. So to help us connect the dots between, say, some central bank changing interest rates and whether you can finally buy a house, let's bring in the expert.
Hey, happy to be here. It's definitely a fascinating time to be in the markets, that's for sure.
No kidding. Okay, so this global policy easing, 27 major central banks cutting rates. That's everyone in the G10 except Japan, right?
Yep, pretty much across the board.
What's that actually mean for people? Lower mortgages, finally.
Well, it could, eventually. But I wouldn't go running to open houses just yet. Home ownership, still a long way from being affordable again. What is interesting, though, is bonds.
Bonds. Really? Those always seem so, I don't know, boring.
They can be, yeah. But right now, especially in Europe where things are a bit shaky,
Yeah.
there's value.
So when Europe's nervous, we buy their bonds. That's the idea.
It's not that simple, but yeah, there's something to that. You want decent yields. You don't even have to go overseas. U.S. corporate and municipal bonds, over 5% right now.
Not bad at all. Now, back in, what was it, like 2009, everyone was screaming about emerging markets. Is that back on the menu?
Ah, the good old days. This time, J.P. Morgan's actually saying, not so fast.
Yeah.
They're a hard pass right now on emerging markets.
Really? Why is that?
China's a big part of it. Consumer confidence there is awful. Their property bubble's deflating like a sad balloon. And there's that whole trade war thing brewing with the U.S.
Yeah, that's not a good look. But there are other emerging markets, right? Surely some are doing okay.
Oh, there are tons. But here's what J.P. Morgan points out. A lot of companies in those markets, they're famous for diluting their share value.
So even if they're making money, it doesn't actually trickle down to the investors.
Right. Like they're making a giant pizza, but they keep cutting smaller and smaller slices.
Yeah.
So J.P. Morgan's saying, stick with the developed markets for now.
US, Japan, that kind of thing.
Yep. U.S. has those high profit margins. And importantly, companies are actually giving back earnings to shareholders. Dividends, buybacks, the whole 9 yards.
Makes sense. Now, Japan, they've always been kind of tough for us outsiders, haven't they?
They have. But J.P. Morgan says they're finally starting to be more shareholder friendly. Could be a good time for private equity to jump in there.
Interesting. So developed markets are the safe bet, but any emerging markets worth at least keeping an eye on.
Oh, absolutely. Got to be selective. But Taiwan, India, Indonesia, and Mexico are flashing some interesting signals in public and private markets.
Okay, so not a total write-off, just got to be picky. Now, this capital investment bonanza thing, JP Morgan seems really hyped about 2025. What's got them so excited?
It's kind of like, picture this. You've got companies sitting on mountains of cash. Governments are desperate for their economies to grow. And then you've got these huge GE trends just sucking up all that capital.
Let me guess. AI is one of them.
You got it. AI, power, and energy, and then the whole security landscape. We're talking fundamental shifts that are going to affect every part of our lives. And that's what gets investors drooling.
Okay, let's start with AI. Is this real or is it going to go bust like the dot-com days?
The report is pretty clear. AI is not just some fad. What's wild is how fast the models are getting good, like scarily good.
Give me an example.
Okay, so a few years ago, AI could solve complex math problems, maybe 10% accuracy. Now, they're hitting 90%. And they're becoming cheaper to use.
So like it NIS, the internet in the 90s all over again. Huge potential, but still early days.
That's the thing, yeah. We're talking disrupting every industry. Imagine your doctor using AI to diagnose you almost perfectly every time. Or self-driving cars being as normal as taxis.
Okay, now I'm getting a little freaked out, but also excited. But where's the money? Do I buy stock in robot butlers now?
Well, maybe Sunday. For now, J.P. Morgan's saying a few key spots. Public markets. Look at digital infrastructure companies, the ones making the physical stuff for AI. And any company that's using AI to boost how productive they are. That's smart.
So it's not just the AI companies themselves, it's about how every business is going to use this stuff. Makes sense.
Right. And then on the private market side, startups, companies that automate stuff, that build those AI apps you and I will use every day. That's where the early birds are putting their cash.
Think the next Uber, the next big software thing. Gotcha. So AI, don't sleep on it. Okay, another thing that seems ripe for disruption, healthcare. What's JP Morgan's prognosis?
They're saying healthcare is like
Yeah.
AI's prime target. And for a couple of reasons. One, healthcare is drowning in labor costs. A lot of those jobs, AI can do them.
Right, so more efficiency, lower costs, everyone wins.
Except maybe the folks whose jobs get automated.
Yeah.
But yeah, that's the big idea. And it's not about replacing doctors and nurses altogether.
Yeah, healthcare does seem kind of human, you know? Can AI really handle that?
It's more like giving them superpowers. AI can crunch data, help with diagnosis, so the humans can focus on the harder stuff, the stuff that needs that human touch.
I like that. AI is the sidekick. So what companies are already doing this well?
JP Morgan likes those healthcare technology companies,
Yes.
Veeva Systems, Teladoc, GoodRx. They're using AI not just to cut costs, but to make more money. Win-win.
Smart. Now, what about big pharma, the biotech world?
AI could be huge EE there. Imagine if it could make drug development more successful, more new treatments, faster, any bigger profits for those companies.
And hopefully cheaper drugs for the rest of us, right?
One can hope. And it's not just inventing new drugs. AI can design those clinical trials better. I mean, the whole process gets cheaper and faster.
So AI-powered healthcare revolution. I'm sold. What's next on JP Morgan's list?
Well, if we're talking revolutions, can't forget about robots. And I'm not just talking about robots in factories anymore.
Wait, is Rosie the Robot Maid finally happening? Because I've been waiting for that.
Not quite yet. But JP Morgan thinks those general purpose robots, the ones that can do lots of different stuff, they're about to get way smarter thanks to AI.
So less robot butlers, more like robot everything.
Pretty much. And this isn't sci-fi either. Waymo, their self-driving taxis, already giving 100,000 rides a week. That's just the start. In healthcare, there's Intuitive Surgical, their robotic surgery system. It's AI-powered, and they can't make them fast enough. That's how in demand they are. Even the U.S. Air Force is pouring billions into autonomous fighter jets.
Okay, that's kind of terrifying, but also kind of awesome. So how do I invest in the robot takeover? Give me the cheat codes.
This is the thing. The opportunities are everywhere. Semiconductors, software, industrial companies, the stuff you and I buy. Any sector is going to be touched by this.
So basically, don't sleep on robots. Got it. All right. AI healthcare. Robots. What's the next megatrend JP Morgan's got their eye on?
Get ready to pay your power bill because energy demand, let it go through the roof. They're saying U.S. power demand alone could go up 5 to 7 times in the next few years.
5 to 7. What's going to suck up all that juice?
It's like a perfect storm. You've got America making stuff again. That takes power. Then you've got clean energy, which is great, but it also needs power. And then data centers. Those things are multiplying like rabbits, and they're power-hungry monsters.
Yeah, they're popping up everywhere. But where's all this power going to come from? Are we all going to be sitting in the dark?
Well, funnily enough, JP Morgan thinks nuclear is coming back. Remember Constellation Energy? Their stock went crazy when they teamed up with Microsoft to restart a nuclear plant.
Interesting. I thought nuclear was like the bad guy in the energy world.
It's had its issues, that's for sure. But with climate change being so urgent and us needing reliable energy that's not all fossil fuels, nuclear is looking more attractive again.
Okay, so nuclear's back. What about all the renewables? Aren't those the future?
Renewables are growing fast, no doubt. But JP Morgan thinks natural gas is going to stick around for a while. There are just too many kinks to work out with renewables. Latency issues, how to transmit the power, how to store it.
So it's going to be a mix. Nuclear, gas, renewables. Makes sense. For investors, though, what does that mean?
Think big picture. Infrastructure funds, power companies, utilities. That whole sector is about to go through a transformation. If you understand what's happening, you'll be in a good spot.
All right, so AI, healthcare, the whole power situation. JP Morgan's also got this big focus on security.
Yeah.
And not just like guns and tanks.
They're saying security is way bigger than that now. Cybersecurity, sure, but also critical resources, energy, transportation, you name it.
Security's like the new black.
Exactly. And America's taking it seriously. They want to make more stuff here at home, boost how many computer chips we make, and bring in companies that aren't your typical defense contractors.
So the line between defense and tech is getting blurry.
It is. And it's not just the U.S. globally. Countries are spending more on their militaries, especially on the cutting-edge stuff. Even Europe is trying to secure their supply chains because they've been relying a lot on China and other places.
So it's a global trend. What's JP Morgan saying are the best ways to invest in this?
They're calling this the next cloud computing boom. Just like cloud changed how we store data, security is about to change how we protect everything.
Okay, so how do I get in on this?
They like industrials, utilities, materials, energy, all sectors that are kind of undervalued right now, but they're going to benefit from all the security spending. And then, privately, cybersecurity companies, those are hot right now.
So invest in stuff that keeps the lights on and the hackers out. Got it. Now, we can't talk about 2025 without talking elections. Trump's back. Trump 2.0, they're calling it. What's JP Morgan thinking about round two?
Well, they were cautiously optimistic, I guess you could say. They know Trump brings some good stuff to the table, but also some risks.
All right, let's start with the good. What are they hoping for?
Less regulation, more companies merging or being bought out, a big focus on growing the U.S. economy, and maybe even lower taxes.
That sounds pretty good for the market, right?
Could be. But there are downsides too, like his policies could make inflation worse, the budget deficit could get bigger, and let's not forget about tariffs.
Yeah, those caused a lot of problems the first time around.
They did, and we could see those trade wars that hurt everybody.
So it's a gamble, like always with Trump.
Pretty much.
Yeah.
And it's not just him. The report points out that what happens with taxes in 2025 is a total mystery right now.
Because all those tax cuts from 2017 expire.
Exactly. So get ready for some political fighting over that.
Great, more uncertainty. Just what we need.
And here's another thing the report mentions. It's not just America. Globally, people are fed up with the usual politicians. Like the old guard is losing elections left and right.
So it's a worldwide trend. People want change, even if they don't know what that change will look like. So what's this mean for our poor little portfolios?
It means you need a portfolio that can handle a beating, a resilient one. That's what they're saying.
Okay, resilience. So they say U.S. households have tons of cash, but that old 60-40 stock bond split might be outdated.
If you haven't rebalanced lately, you might be at 80-20 stocks to bonds. And that's a lot riskier than most people realize.
So how do we build a portfolio that can survive whatever happens?
JP Morgan has 3 ideas. 1, focus on income. 2, protect yourself from inflation. 3, got to reconfigure how you think about returns.
Okay, let's break that down. What's this focus on income stuff?
Well, as interest rates go down, you got to find new ways to get yield. Think corporate bonds, high-yield bonds, preferred stock, dividend stocks, the whole shebang. Private credit, infrastructure, even real estate. Lots of options out there.
Don't put all your eggs in one basket. Got it. What about this inflation protection? Everything's getting so expensive.
No kidding. And remember, back in 2022, when inflation went nuts, stocks A&D bonds tanked together. You need assets that zig when the market zags.
Stuff that holds its value when everything else is panicking.
Exactly. Real estate, commodities, infrastructure, maybe even hedge funds or royalties. And then there's reconfiguring returns.
That sounds fancy.
It's about using options and structured notes. Stuff that can limit how much you lose, but still give you a chance to make money. It's finding that sweet spot between risk and reward.
Makes sense. So much to think about. Okay, we've covered a TON global stuff. AI, power, security, elections, and how to not freak out when it all hits the fan.
It's a lot to take in, for sure.
It is, but we wouldn't be doing our job if we didn't give you the shiny nugget JP Morgan wants us all to focus on. Gold. They're calling it a gold rush.
And they might be onto something. Gold hit record highs last year, and they think it can go higher.
So it's another one of those safe haven plays, like when the world went crazy during the pandemic and everyone bought gold.
Kinda, yeah. Central banks, especially in those emerging markets we talked about, they're hoarding gold like it's going out of style.
Why are they so into gold all of a sudden?
It's a hedge against all that geopolitical risk, against governments being in debt up to their eyeballs. Plus, JP Morgan thinks the US dollar is overpriced right now. Gold is a way to get away from that.
So gold's like the ultimate insurance policy for your investments.
You could say that. It's a way to protect your wealth, especially when things are uncertain.
Okay, I'm convinced. Gotta get me some gold. But this is just the start, right? JP Morgan's got this whole section on new investment frontiers. What are some of the things they're talking about?
We're talking about stuff like evergreen alternative funds, which sounds super complicated but are actually pretty cool. Then there's the whole sports and streaming boom, which is wild considering how much TV is growing. And then space. Not just NASA anymore, we're talking a whole space economy that's about to take off.
Okay, I'm officially intrigued. Let's save those juicy details for part 2, though. I need a minute to process all this before we go to the moon. Join us next time, folks, as we explore the frontiers of investing and find those hidden gems that can make your portfolio shine.
Welcome back to the deep dive. Ready to tackle those new investment frontiers?
Oh, yeah. Bring it on. It's like we're about to go spelunking in the financial world, and I've got my headlamp ready. Now, you mentioned these evergreen alternative funds earlier. I gotta be honest, the name sounds a little intimidating. Like, is this for, like, super rich folks with monocle collections?
It's actually not as complicated as it sounds. Think of it like a mashup between traditional private equity, which is super exclusive, and those mutual funds everyone's familiar with.
So I get the potential for those crazy private equity returns, but I don't have to lock my money away for a decade.
Exactly. Traditional private equity. That's like buying a fancy bottle of wine. Got to let it sit, age for years, hands off,
Yeah.
evergreen funds. More like a craft brewery. You can swing by and grab a new brew whenever you want.
Okay, that's an analogy I can get behind. So more flexibility, which is good for someone like me who, might need to actually use that money at some point.
Right, that's the appeal. And they usually have lower minimum investments than private equity, so they're not just for the ultra-wealthy.
But there's got to be a trade-off somewhere, right? No such thing as a free lunch.
Well, that flexibility and accessibility come at a price.
Higher fees.
Usually higher than traditional private equity, yeah. And the returns might be slightly lower.
So it's like choosing between a 5-star restaurant with a prix-fixe menu or a cool neighborhood spot where you can order whatever you want.
I like that. Good analogy.
Yeah.
It all comes down to how much risk you're comfortable with, how long you want to invest for, that kind of thing.
Okay, makes sense. Now let's move on to something a little more fun. Sports and streaming. JP Morgan seems super bullish on that, which seems kind of counterintuitive. I mean, cable's dying, streaming is expensive, and everyone's staring at their phones constantly. What's the play here?
It's a weird one, right? But here's the thing JP Morgan is betting on. Live sports are one of the few things people still watch live.
Yeah, there's something special about watching your team win or lose, let's be real, as it happens. Can't get that same energy from a replay.
Exactly. It's a shared experience, the unpredictability, the energy of the crowd. Streaming hasn't been able to capture that. Not really.
So they're saying owning a piece of a team, a league, that could be a good investment.
Potentially, yeah. Those live sports rights,
Yeah.
super valuable. And the competition's only getting fiercer, especially with all these streaming giants wanting in on the action.
But the whole media landscape feels like the Wild West right now. Nobody knows how the streaming thing is going to end up.
True, there's definitely risk. But JP Morgan thinks the leagues are getting smarter, loosening up those ownership rules, finding new ways to get fans engaged, to make money.
So it's a bet on the fact that people will always love sports no matter how they watch them.
That's the idea. People crave connection, entertainment, and sports deliver both in a way that few other things can.
Okay, I'm ready to blast off to the final frontier now. Space. And we're not just talking government missions anymore, right? This is a whole space economy that's ready to take off.
It's a pretty exciting time to be following this stuff. Private companies are driving a lot of it. And it's not just about putting people on the moon or Mars anymore.
So what are we talking about? Space hotels? Mining asteroids for precious metals?
Maybe, someday, who knows? Right now, though, it's more down-to-earth stuff. Satellite communications, observing Earth from up there, and yeah, space tourism is starting to become a thing.
Satellites already run so much of our lives. GPS, Netflix, the whole shebang.
Right, but the next generation of satellites,
Yeah.
way more sophisticated. Think faster internet, even clearer pictures of the planet, more accurate weather forecasts, all from up there.
And all that data can then be used to improve stuff here on Earth. Agriculture, transportation, even responding to disasters.
Exactly. And then you've got SpaceX, Blue Origin.
Yeah.
They're making space travel more accessible, even if it's still crazy expensive.
So space tourism might be for the super rich right now, but it could become a massive industry.
JP Morgan thinks so. They're saying it could be a $5 billion per year market pretty soon.
Okay, space, definitely worth watching. But let's come back down to Earth for a minute and talk about something a little less cosmic. You mentioned liability management earlier, which sounds super technical, but I have a feeling it's something we should all be paying attention to, right?
It's not the most glamorous topic, I'll admit.
Yeah.
But when it comes to your finances, it's super important.
So what is it exactly?
Basically, it's about managing your debt strategically. When to borrow, how to borrow, and how to take advantage of all these interest rate changes happening.
So it's not just about paying off your debt as fast as possible,
Sometimes it makes sense to hold on to debt, especially if you've got a good interest rate locked in.
which, with all this talk of global policy easing and rates going down, now might be the time to do that.
And that could be. JP Morgan suggests using things like swaps, caps, and collars to manage how much your interest rates could change. Could save you money in the long run.
Okay, break those down for me. They sound like Wall Street jargon.
They kind of are, yeah.
Mhm.
But basically, they're like contracts that help you hedge against interest rate changes. So a swap lets you trade a fixed interest rate for a floating one, or the other way around, a cap. That sets the maximum interest you'll pay on a loan. A collar sets both a max and DM in.
So it's like insurance for your debt.
Yeah, kinda. You're protecting yourself in case rates go up unexpectedly.
And this applies to like mortgages, home equity loans, all that stuff.
All of that and even more complex corporate debt. And it's not just about managing what you already owe. With rates going down, it might be a good time to refinance or look into a home equity loan.
So be proactive, be strategic.
Got it. Okay, last stop on our world tour. Reimagine cities. The pandemic really messed things up. With everyone leaving cities and working from home, is the city dead? Are we all going to be living in like rural compounds from now on?
Not quite. Cities are tough. They adapt. They're changing to fit this post-pandemic world.
So what does that look like? Where are the investment opportunities in this new urban landscape? JP Morgan sees a few things happening. One, people want low-rise, multifamily homes in nice suburbs. They still want amenities, community, but they also want space, maybe a yard.
Makes sense. So suburbs are getting more urban and cities are getting more suburban. It's like everyone's swapping places.
Kinda, yeah. It's about finding that balance.
What about offices? Is everyone just going to work from their pajamas forever?
Working from home is here to stay, but it's not like offices are gone. A lot of companies are doing this hybrid thing where people split their time.
So offices are evolving, not disappearing.
Exactly. And JP Morgan thinks those offices in good suburbs, the ones that cater to this hybrid workforce, those are a good bet.
What about all those empty stores in cities? Are those just going to become ghost towns?
That's where it gets interesting. JP Morgan thinks we'll see those spaces redeveloped into hubs that do a bunch of stuff.
So instead of just stores, it's apartments, offices, restaurants, maybe even community centers, all in one place.
Right. It's about making those spaces vibrant, multi-purpose, something that fits how people live now.
So it's not about picking between city or suburbs. It's about realizing they're both changing and finding the opportunities within that change.
Exactly. And it's important to remember, not everyone's abandoning city centers, those fancy Class A office spaces. They're still being built because some companies still want that central location, that collaborative environment.
Okay, so there's room for both urban and suburban growth. It's all about understanding the trends and figuring out who's best positioned for the long haul.
That's the key takeaway. And remember, don't just rely on one source of information. Talk to experts, do your research, and form your own conclusions.
Right, because the world's not standing still, and neither should investors.
All right, welcome back for the final stretch of our deep dive into JP Morgan's 2025 outlook. We've hit the big themes, those trends everyone's buzzing about, how to build a portfolio that can actually handle a punch. Basically, how not to totally lose your shirt in the market.
Yeah.
Now we're going global. What are those regional plays, the hidden gems, the places smart money is either sneaking into or running away from? Yeah, it's fascinating how different parts of the world are reacting to all this stuff. Some are diving headfirst into the chaos, others are battening down the hatches. But JP Morgan says there are opportunities everywhere if you know where to look.
Okay, let's start with Asia. It's always been this economic powerhouse, but lately, emerging markets haven't exactly been lighting up everyone's portfolios. What's JP Morgan's take on that?
Right, there's this weird disconnect between how fast their economies are growing and what their stock markets are actually doing. They break it down to three things: economic structure, corporate governance, and then the whole export thing.
Okay, unpack that for me. Start with economic structure. What's that all about?
Well, some countries, they're great at making stuff, building things, exporting like crazy.
Yeah.
But their system just isn't set up to make big corporate profits.
So lots of activity, but not much reward for investors, like a hamster wheel.
Exactly. You might see governments propping up companies with subsidies or state-owned businesses crowding out the competition. That squeezes profit margins.
And then there's corporate governance, which always sounds kind of scary.
It's really just about how companies treat their shareholders. Do they care about making the money, or are they focused on other things?
Like making sure their CEO's nephew gets a summer internship.
Maybe not that blatant, but yeah,
Correct.
companies with good corporate governance, they're the ones who are growing their earnings per share, returning money to investors through dividends and buybacks. Those are the companies you want to own.
Treat your shareholders right, and they'll treat you right back. Got it. Okay, what about exports? Why are those so important?
A lot of emerging markets, their whole economy is built on exports. Domestic consumption is rising in a lot of these places, but exports are still a big driver of corporate profits.
So you got to keep an eye on global trade patterns. Who's buying what from whom?
Exactly. Now, zooming in on Asia specifically, JP Morgan does see some bright spots.
India. Right. Everyone's talking about India.
Bingo. Booming private sector, growing middle class, and their government's actually making some good moves with economic reforms. They're hitting a lot of the right notes.
Okay, India. Check. What about China? They're the big question mark, right?
Absolutely. China's this fascinating case. Their economic structure is both a strength and a weakness. They dominate exports, but their corporate governance practices, well, let's just say they're not always investor friendly.
And then there's the whole government intervention thing. They're not exactly hands off, are they?
Nope. The Chinese government plays a very active role in their economy, which can make things unpredictable, especially for foreign investors.
So China proceed with caution. Got it. What about Latin America? They always seem to get overlooked.
JP Morgan thinks Latin America has a ton of potential, but it's also a region that can be really volatile.
They've definitely had their share of ups and downs economically and politically.
That's for sure. But there are some good signs. The middle class is growing, tech and innovation are booming, and they're becoming more integrated with the global economy.
So is there hope for Latin America?
There is, but investors got to be aware of the risks. Political uncertainty, currencies going up and down, commodity prices swinging wildly. Those things can make or break your investment.
High risk, high reward.
Exactly. And remember, Latin America isn't one big blob. Each country's different, so you can't just apply the same strategy everywhere.
Do your homework, be selective, and buckle up for a bumpy ride.
Words to live by.
Okay, last stop on our global tour, Europe. They've been through a lot lately. Debt crises, Brexit, the war in Ukraine. What's the outlook?
JP Morgan sees Europe as this region in transition, facing some serious challenges, but also reinventing itself.
So good news, bad news.
Pretty much.
Yeah.
Slow growth, high debt, and aging population.
Yeah.
Those aren't exactly signs of a booming economy.
Yeah, that's not great.
But on the flip side, Europe has some of the most innovative companies in the world, cutting-edge tech, a highly skilled workforce.
Yeah, there's a lot to work with.
So potential is still there, definitely. JP Morgan's particularly bullish on renewable energy, healthcare, and tech areas where Europe is a global leader.
And what about the political scene over there? Is that a worry?
European politics are complicated, for sure. But JP Morgan thinks the European Union is a stabilizing force and that they're committed to solving their problems.
So a sense of resilience.
Definitely. Investing in Europe takes a thoughtful approach, a long-term view, and a willingness to accept both the risks and the rewards.
All right, so we've circled the globe, explored the trends, the challenges, the opportunities. What's the big takeaway from all of this?
I think the main point is that the world's always changing, and those changes are what create opportunities for investors who are paying attention.
It's about staying informed, being flexible, and never losing that curiosity.
Well said.
So as we wrap up this deep dive into JP Morgan's 2025 investment outlook, I hope our listeners are feeling a bit more confident about navigating the markets, making smart decisions, and maybe even having some fun along the way.
That's what we like to hear.
Thanks for joining us. And remember, the best investment you can ever make is in yourself. Stay curious, keep learning, and never stop exploring.